Now, since the GameStop frenzy has ended, now it's time for other opportunities. So I got an interesting opportunity where I'm going to show you where an institution sold a massive amount of puts, took about $1 million in premium in, and they're looking for prices to continue to ride its trend higher into the next several weeks. And if they're right, they look to make about $1 million, but they'll probably take it off before then. So my name is Joshua Belanger, and this is another episode of Follow the Money. So we're taking a look at Builder's First Source. If you haven't heard about this stock until today, you wouldn't be the first. I came across this as well, but if we take a look here at the chart, what do they say? The trend is your friend, right? So what do we have here? We have the trend is our friend, and what do we look to do here? We don't fight the trend, we go along with the trend. So what we're seeing with some of the activity in the options market is a big seller of puts here. So if we just take a look back, I just want to scale back a little bit on the 3-year weekly, and we've had a massive run in this stock. It went from $9 to $43. I have to take a quick look at this afterwards just to see what this company does. But it looks it's a recent IPO, and it's been ripping higher here. There is earnings coming up in the next couple weeks here. I think it's on the 27th. Something to be ahead of if you're looking at this position here. But the interesting thing is, if you're looking to sell or learn how to sell puts, most of us have smaller accounts. So when you sell a put on a higher priced equity, you got to take up a lot more margin, and/or there's a lot more opportunity for it to fall to go to zero. So selling puts on Apple takes a lot more capital than selling something that's $40 here. So it's always interesting to see this kind of positioning, especially in a $40 stock or smaller stocks that smaller accounts can actually participate in as well, selling a put and putting that position on without having to buy an extra leg to reduce the overall margin, or you could buy the leg to reduce your risk. So what we're going to look here is in the March contract. So the next 43 days, we got 43 days here, and we see this sticks out like a sore thumb. So the March 40 puts here, they traded in a block. They were sold in 4,000 contract, and at the time when they traded on the bid, it was $2.30. So this is a pretty decent spread here, 210 by 265. And this activity here for the day was 600% increase in activity. And that's why, I follow this kind of activity in the marketplace because I want to know what's going on in the option market. All of a sudden we see this big position and what's going on in that position here. So this being that they sold, you can look at the time and sales here. And there's 8,000 puts that traded against 710 calls. We can see here that some calls traded and puts as well traded. Let's look at the top trades here. So we have some May 40s, Feb 41s. So we have a little bit of call action here, but that's where that put activity ended up being as well. So I'm not sure where the other 4,000 contracts traded, but what they're looking for on this one, if they sell at 230, they're going to come into expiration here, or not expiration. They're going to come into earnings, which is going to be a risk for whoever put this position on. So this could be something. If you look to do this, to me, when they're selling this at $2.30, they're probably going to be buying this back at. I probably would assume if they continue to think prices are going to go higher, time ticks away. This is something I think that they are buying back probably at $1, if not rolling. Oftentimes what we'll see is that they take this premium and then they'll roll this position out into May, or at that time June contracts will come available. So this is an interesting way of finding. This was about $1 million that they put on this position. Now they have a decent amount of risk here if prices do go against them. But there's a couple things that we could look at here. Is that in this position here, the probability of being touched, meaning that prices actually go into that position, because it's at 41.55, there's about an 85% probability. And these are key numbers to understand when you're trading or have positions on in the stock or options market because it gives you context about what can happen. Oftentimes people have, they put on a position and they're not sure what's going to happen here. So we can understand that if this person putting this position on, there's an 85% chance that prices will be touched in that time frame. And right here, they have a return on capital of about 35% in the next 43 days, and that's why it's interesting. You got about a 35%, and if they take the whole premium in, so they have a 35% return on capital with that it's on margin here, and if they look to take to buy back at that $1.15-ish range, they'll be taking in about $1 million that they collect out of there, and if they roll over. But this is important because this gives context on a position here of what a big institution is doing, how they're positioning themselves, and what they're looking for in the next 43 days. So on BLDR, it looks to be where they're positioning for a continued move higher, and also if prices just hang around here, kind of just trade sideways for the next couple weeks, they also make money with that time decay that kicks in as well. They'll probably buy it back, roll it forward possibly, and it's something to keep an eye on. So this is a strategic way of how to use options, how to take money out of the marketplace using options, or understanding how decay and options work and be able to use it as that. So that's really how to, a good example of somebody putting up big money on a bullish put position that could make money if prices stay still, and also makes money if prices go higher. So keep an eye on this one over the next 43 days. Let's see how it pans out, and make sure you like the video, subscribe, and leave a comment. We'll see you in the next one.